Hi, welcome to the Market Alert for Friday, the 11th of October 2019. So in today's Market Alert, we start off with Bitcoin continues to struggle to get over the 8,700 price hump, as we will see. We go and have a look. We'll start off with the daily chart. No surprise really when you see the market banging its head against the 200 bar MA there. You can see how this has been a resistance with this market and prices have been pushed back off it, and that's what we're seeing now. And if you look at the 4-hour chart, you'll see their prices moving back to the downside there and still below the 200 MA in the 4-hour as well. Looking at things a bit closer, yesterday the market making just some small moves up and down and just bouncing around in a range of let's have a look, $200, and then sideways overnight before moving higher and then hit with some selling, but now attempting, if we look closely, to come back to the 200 MA. So let's see if the market can close back above this. It's very important that it does if it is to continue to move to the upside there, and potential buy signal just coming in as the market settles at this area here. So yeah, Bitcoin struggling a bit longer term. We want to see a close above the 200 MA in order to move higher, and also in the 4-hour, and the same for all other charts as well, is to take out this high here of 8755. It needs to take out 8,800 really to get that convincing move back towards the 900, and then of course ultimately to close above the 200 MA there as well. Meanwhile, in the stock markets, fun and games continue after overnight chaos that we saw when the market dropped 300 points. Again, the Trump tweet sparks a stock buying panic. As I've said before, the market doesn't want to seem to move on economic news anymore unless it suits the market. It all seems to be on what Trump sends out. This trade deal is a bit of a farce. One day it's on, next day it's not. But anyway, the market was just what it needed to respond and move higher as prices came down towards the 200 MA and then moved higher, closing back above the 50 MA in the daily there. And in the main event, you can see the market finding support at the 200 MA. Once broken, you see there moving higher off the bottom of it with professional buying, a bit of selling pressure here, and then some buying coming in again, and then holding at the psychological level here as well, which you can see there, the red line, and then the buying coming in, followed by a bit of absorption there, and then driving, and then a bit more absorption, and then just blowing to the upside there. So a big move. Market stops with the selling here and then trades sideways, which you can see the sell signal fails because the market doesn't want to sell. It then moves up and trades to the R2. At this level, you're about 95% of the market stopping and turning around. How does it show this to us? Well, it's quite simple. You go from the high to where the market stops. You'll see prices there at around the 76% retracement. They close back below the 20 bar moving average and the minor psychological level and trade down to the 50 bar, which is also another minor psychological level there. Comes back and retests it, and then manages to get through and sit again, finding resistance at the 50 bar average, and a shakeout once more through both averages, but still long as the 200 MA is not breached. Prices trade sideways, and then we have not 76%, but about 62 here as well. The market holding at the previous day's high, which you can see here, and then it's a case of moving to the upside once more as Trump sends out his tweet, and there you'll see the market continuing to move higher at the moment on the overnight, which you can see in the daily chart. Watch the 20 bar average. This is a resistance area for this market. And let's have a look and see what we've got news-wise today. There's only the Ecofin meetings at 11:15. Whatever they're going to say. If you're in any currencies, watch out for this. And then FOMC Rosengren is going to speak, but that's not going to make a lot of difference. So there's only the one news item today. So that does leave the market free to move to the upside, especially if Trump gets tweeting. Because that's what the market's looking for. Anything to move it to the upside. And in the implied volatility, given what the moves to the downside yesterday, only a marginal increase of from 7.3 to 7.8 in the implied volatility, which is really odd. But that's what the market is showing there at the moment. And again, currently we're still short across the board as far as, or potential short, because of the implied volatility being above the average and prices also being below the average there as well. Still needs a further shakeout for me, but they're doing their best to keep the market moving to the upside. Meanwhile, in the 10-year yield, not seeing the bigger picture for a while. Anybody that's new, these are the recessions that have followed the inversion of the yield curve. The inversion is the red there. And as I said yesterday, you want to see this come back to green before we get to the recession. And you'll see that this is moving up quite nicely. Minus 0.01 for yesterday. We had a bit of a green one there, but it was a one-day wonder. Let's see what happens going forward here. Meanwhile, Deutsche Bank getting a bit of a bounce. No surprise there, and I'll show you why in a second. So back above the 20 bar moving average, and as it says yesterday, if you've not seen this channel, go and have a look. Monaco 64, the Fed and the BIA, Bank for International Settlements, throw Deutsche Bank a lifeline, and there you can see Federal Reserve drops toughening liquidity rules on foreign banks. So Deutsche Bank is being supported by both the Fed and the Bank for International Settlements. No surprise, because if this one goes down, the whole system goes down with having trillions in derivatives. So that's why this is being supported at this moment. How long they support it for, who knows? But this is the reason behind this. So Fed, amazing what rules and regulations they can change to suit themselves. And there you'll see this happening there. Okay, that will do it for this one. Actually, no, it won't. We need to have a quick look at the pound, because yesterday we had the market sitting at the 200 MA all the way through until apparently, again, it's a bit like the Trump tweets at the moment with Brexit. Any bit of good news, apparently the Irish Taoiseach and Boris, looks like there's some sort of deal on the backstop or whatever it is. Like I say, I don't really take any notice. What I know, looking at this though, for a potential trade, the market isn't breaking the 200 MA and bouncing off it. So looking for other information, sitting at the DP level, and then we get a signal and off we go. See the pound move up a couple of cents there in this move. So the pound in the daily, you can see they're moving higher. What I'd be looking for here is from this high to this low. See where the 76% lands, and it's just around here. So watch these levels, 62, 76 there for the market to find a bit of resistance. See what happens today, see if there's any more information. It's going to start getting a bit more heated as we head towards next week, that's for sure, as Johnson goes over to Europe to see if there is a deal or not. So it could get a bit livelier in the pound going forward. Okay, that will do it for this one. If there is anything else to report during today's activities, I will let you know. But otherwise, as ever, thanks for watching and see you in the next one.